Luxury goods company Richemont owns top-end brands like Cartier, Alfred Dunhill and Montblanc. Subject to economic whims, the company's profitability rises and falls, and that's depending on consumers' access to disposable income. What does the future hold for Richemont, and more importantly, should we be investing in it? Joining us from Cape Town live is the Finweek contributor, that's Moxima Gama. Moxima, I know you were initially very bullish on this particular stock, but now you've cautioned it. Why?
Well, to be honest, I've been cautious on the stock. I've been cautious on it from the beginning of the year. On technical analysis basis, it was because it was starting to top out quite significantly and trading sideways. So that was already a sign that the bull trend was getting a bit exhausted, which is a bit normal because Richemont has had its opulent days, and a correction is well due at this point. So I've gone from bullish to caution because it's particularly broken out of a head and shoulders pattern, which means we should anticipate more downside, at least in the short term, to around the 78 levels. So if one is thinking of going long at this point, I'm afraid you'd probably be catching a falling knife. Don't be fooled by the upside we saw last week, because it's usually called a dead cat bounce, and all the indicators are still quite bearish on Richemont.
So with the economic data, I know that China is obviously a big market for Richemont, but with the data that's been coming out of China, does this just reinforce the fact that one should really be cautious when it comes to Richemont?
Yes, you really need to be cautious at this point. Look, in the long term, luxury goods service is a sector that you want to have in your portfolio, because it's now termed the affluent society, which is particularly in Africa, is growing, and luxury goods have become very prominent. So in the long term, it does have a trend that's going to be on the upside, but in the short term at this point it really needs to correct, which is quite healthy for a bull trend. You can't have something that goes up indefinitely. So this pullback could just bring it back to nice prices, which will possibly be nice cheap prices to get in. But if you're thinking of going long at this point, I think I would caution you to just hold until the downside objective around 78 is met before you start initiating any long position. And if you are highly exposed, I would strongly suggest you reduce your exposure, because there is some downside that we anticipate.
Now, Moxima, you said that if you were going to get into the stock, it would be like catching a falling knife. What, in your view, would change your opinion of this? You mentioned that you have to wait now. Going in short is a great idea. You have to wait for certain levels. So what exactly do we need to say, okay, if X happens, then that means that's your chance to get in long on the stock?
Look, it would have to trade above its prior high, and I think a good sign would be around the 104 or 106 levels. For as long as it continues to trade below that, it means we're still in the correction, and it seems to be struggling to go above that 98 level, which was initially what it breached to confirm the head and shoulders pattern, which is a bearish reversal pattern. You'd start nibbling at around 105, but any level below that would just reinforce the fact that we are in Richemont is in a correction, and you should rather wait because there is more downside, and you just don't want to be long in a falling stock.